So we completed deal assumptions. We calculated standalone pre-tax income for both Google and Motorola, acquirer and target company. And now in the step number 3, we're going to build pro forma net income here. Pro forma earnings describe a financial statement that has hypothetical amounts or estimates built into the data to give a picture of a company's profit if certain non-recurring items were excluded. Pro forma earnings usually leave out one-time expenses that are not a part of normal company operations, such as restructuring costs following a merger. So here we're going to take our pro forma pre-tax income as a sum of our pre-tax income of target and acquirer. And then we are going to subtract and add some of non-recurring items such as interest expense from new deal debt, incremental depreciation and amortization expense, deal fees, financing fees, amortization, synergies, and we based on that adjustments that are non-recurring and happen because it's an M&A transaction deal. We will calculate pro forma pre-tax income adjusted and then pro forma net income. Let's go ahead and do it. I'm going to fly it to the cell D25 with F5 function 5. And my first calculation for pro forma pre-tax income unadjusted is a sum of standalone pre-tax income for target and acquirer. Next is the interest expense from new deal debt. We want to put it as negative because we're going to subtract it to calculate pro forma pre-tax income adjusted. So I'm going to put equals minus, and I'm going to multiply my acquirer new borrowing by interest rate on the new debt, which is 5% in the cell G18. Beautiful. Next is incremental D&A expense. We have it in our deal assumptions in the cell G29. So equals minus, I'm going to fly to the cell G29 and grab it from here. Amazing job. Next is deal fees. Again, I'm going to put equals minus, and I'm going to find deal fees in the cell G31 of my deal assumptions. F5 G31, and it's $5 million, my deal fees. I'm gonna grab it from here. Amazing job. Next is financing fee amortizations, again given to me in my deal assumptions, equals minus, and I'm gonna fly to the cell G20 to grab 400,000 of annual financing fee amortization. We calculated in the step number 1. And we're gonna add some synergies from our assumptions as well. I'm gonna keep it positive, so equals, and flying to the cell G22 to grab synergies from the deal assumptions, $100 million. Great job. After we put all the non-recurring items together, we can just sum up all items above to calculate pro forma pre-tax income adjusted. Let's go ahead and sum it up and receive our final number. Now to calculate my pro forma net income adjusted to the tax rate, I'm going to take the calculation above and multiply it by 1 minus my tax rate in the cell G13, so F5 G13, and grab tax rate from here. I like the formula, and I'm gonna push enter to calculate the final pro forma net income. Beautiful. We just calculated pro forma net income, step number 3. And for the 4th step, we would perform accretion dilution analysis in the following video.